Learning objective 4.2, explain the objectives and components of internal control. So just as I mentioned before in the previous section, opportunity is the one area where management can possibly control to the point where they'll minimize the risk of fraud. And we use internal control, as the textbook suggests, as the primary way to prevent, detect, and correct fraud. And the plan of the organization and the procedures implemented to accomplish 5 objectives. So here are the 5 objectives we have when it relates to internal control. Safeguard of assets. That's making sure things just don't disappear, including cash, inventory, etc. Encourage employees to follow company policy. Well, we put in place detections or monitors or authorizations or whatever it may be that we read about to make sure or to encourage employees to follow company policies. To promote operational efficiency. So internal controls can help even make your company, even though sometimes we think of them as of creating barriers, in many cases, the internal control procedure can actually make it so that you get things done sooner or faster. They ensure accurate, reliable accounting records, and they also comply with legal requirements. So these are the 5 objectives to internal control. What you're seeing in Exhibit 4-2 is an excerpt from a public company management report on internal controls. The report there suggests what management is responsible for in terms of internal controls. And then at the very end, towards the end of this report, this is not comprehensive. You see wherever the dots are, there's more to it. But at the end, the accountants, the auditors, will give their opinion based on our evaluation. Management concluded that our internal control over financial reporting was effective as of December 31st, 2018. So what we're really thinking about, if we're looking for another visual to get us to understand internal control systems, is we want to put systems in place that really act as almost like a firewall, or really here's a wall. You have your assets here, you want to protect your company assets. And then what's trying to break through this wall is fraud, waste, and inefficiency. So the internal controls attempt to address those 3 items. We can also paint another picture here where we can look at a home and take elements of the home and categorize them in the context of internal controls. So naturally, when you have a home, you're trying to protect what's inside the home. And those we might consider those to be assets. Well, for that to happen, you're going to have control procedures. Control procedures meaning you may have like locks, keys, maybe alarm codes, whatever is necessary to confirm that those who are entering are authorized to get into the home. In addition, if this is more like a business, you may have someone in the front that's actually taking down who are the visitors, and when they're taking this down, you're adding to an information systems. But in the context of a business, you're thinking, okay, information systems, that is your accounting system that's really tracking information that helps generate reports that would suggest that something may or may not be right. And so we like to use that here, inside the organization, maybe even at the front. In this example here, you have like a little receptionist area. We think of the windows of this structure, we think of the windows as being the monitoring. We can look and watch and see what's going on inside. Well, the same thing would be with a system. You want to be able to keep track of what's going on. So we have monitoring systems in play. And then at the very top here, you see the roof. We've called that the control environment. Control environment is just the way the company perceives or sees, or how the company enforces the control. It's the environment. Is control an important thing for this company? And then on the outside, you'll see that there's risk assessment. And so in this context, management has to be able to look and see what's going on and where are there risks. The reality is that companies don't have unlimited funds to protect everything at whatever cost. It doesn't make sense to spend $1 million on alarm systems to protect a $1,000 piece of jewelry. Doesn't make sense to do that. So companies are required to assess where are the risks, where are the entrances that may not be authorized. What can we do? We don't need the entire home here covered in alarm systems, but maybe we put some detection systems in the windows because those are breakable. People can get in that way, right? The control environment I mentioned to you earlier, that's what was up the roof. In other words, how does management perceive the control environment? If they put control as an emphasis, if they emphasize control and control procedures to protect the assets, then you're more likely going to have better controls. If management is kind of like, oh, whatever, just do whatever you need to do, just blah, 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 then you're not likely going to have a very strong control system in place. And then a good indication is whether a company has a code of ethics in place. And you know that when you're being hired from companies, they often require you to obtain a copy of their code of ethics and often require you to initial something to confirm that you've actually read it. So that's an indication that that company is valuing ethics and they're requiring their employees to read it and then sign off that they have read it. Risk assessment, that was the SKY that I mentioned to you earlier. That is identifying business risks, establish procedures to deal with those risks. Okay, so that's what I was talking about in terms of risk assessment. Where is it that we're vulnerable within the organization? The information systems, that's the means by which accounting info enters and exits. And we want to accurately track our assets, profits, and losses. Control procedures are the means by which companies gain access to the 5 objectives of the internal control. Control procedures help us to achieve those 5 objectives. And the monitoring of controls, that's usually programmed into the technology, and we're talking about internal and external auditors that'll come in and review what you have in play to make sure that things are running as they're supposed to. So let's go over some examples of internal control procedures, commonly used internal control procedures. Well, specifically related to employees, before we even get started in working, we want to make sure that we have smart hiring practices. So some companies even go so far as to have background checks. Before you get hired, there's going to be some type of background check, whether it's through some scanning system, some like live scan, I think that's what it's called, where they do a check with law enforcement to see if there's any issues that need to be addressed, if there's a background check. Smart hiring practices include training and supervision. So we're going to make sure that our supervisors are trained, those individuals who are hiring are trained in selecting individuals, that they're also in a position where they can provide adequate supervision. We just don't hire somebody and just let them just run amok. We're going to hire them and then put them in a position where they can demonstrate their honesty, demonstrate their commitment to the organization, and monitor that so that we're sure or certain that they're going to be okay within our organization. Smart hiring practices also involves competitive salaries. You don't want individuals working for you that would never be hired from anybody else because they're not good enough. So that may happen if your salaries are too low. So those that are better workers, more competent workers, are going to be going to places where the salaries are more competitive or better. So you want to make sure that whenever you can, your salaries that you're offering to your employees are competitive. And then you also want to make sure that when you hire individuals that there's very clear employee responsibility. In other words, if you have, let's say, a petty cash box that various individuals can obtain money from to reimburse them for whatever expenses, or maybe take money out in advance to go buy something, then you want to make sure that you have a very clear, you want to make sure that you have something in place that makes it clear who's responsible for that petty cash. In addition to smart hiring practices, that was our first internal control or review of internal control procedures. The next area, separation of duties. Separation of duties. This is a part of internal control procedures, and more specifically, we're going to be looking at making sure that we're separating responsibilities of handling certain assets so that it's a little more difficult for one individual to get away with things. So the example would be cash. If you're working at the front register of let's say, a retail store, then you're going to be managing or handling cash regularly. Well, you're also going to be given a drawer that's allocated specifically to you, all right? So a drawer with you, maybe your supervisor might be able to get in with a code, or you have a code. Record keeping. The example here is if one is doing, and we're going to learn about bank reconciliations, you don't really want an individual who is reconciling the bank to also be one that has complete access to the cash. And the reason being is because if they're finding ways of taking money from the bank accounts, they may be better able to mask it or not make it so obvious if they also are in control of the record keeping. And then the next area discussed under separation of duties is transaction approval. And in transaction approval, you want to ensure that not just anyone within the organization can create a transaction. Not just anyone can just enter an invoice or write a check or process transactions to distort the information in the book. There has to be some approval system in place at different levels. Continuing on with internal control procedures, we're going to be looking at comparison and compliance monitoring. All right. So what's interesting is that we don't often really realize a budget can even work as internal control. In most cases, we create budgets so that we have like a plan. This is the plan, this is what we're allowed to spend. We know what that amount is, and then we execute it. We try to execute our operations consistent with our budgets. But the budget process can also act as internal control in that it forces people to go back and see what we normally spend. It forces people to go back to check to see if it makes sense what we're spending in the past. Once you get into the year, if something sticks out, if something is out of alignment, and the example I can give you is that years and years ago, there were some issues with one of the local medical facilities where apparently office supplies were being purchased. The organization was purchasing it, and then individuals or employees were taking it and then selling it on eBay, all right? Now, without regard to the purchase or transaction controls, without regard to the asset controls in place so that people can't just walk off with it, a budget system can also work it, because if you're spending more on office supplies than you have it ever in the past, which would be required, right? Because if you're just using the normal amount of office supplies and yet your office supplies purchases have doubled, well, there has to be a reason for that. So it forces people to see something and say, hey, something doesn't look right. This is out of sync. Well, that's what the budget process can do for you. Exception reporting would be that if some things are occurring that are not normal, which would be like a budget versus actual report, that would be part of your compliance monitoring. And then an audit. Public organizations on an annual basis are, and when I say public entities or public organizations, we're talking about publicly traded organizations, those that are bought and sold in the open markets, the stock exchanges, those companies that you can purchase stock in. It's not private, it's public. Those public entities are required to have accountants conduct audits. And in those audits, they confirm, as part of those audits, they're confirming that the numbers that are being presented are reasonably accurate. And they're also checking for internal control procedures. That's just part of the financial audit requirement. Is an external auditor is required to go and see how good are these internal controls, and then use that information in terms of planning the audit. And in addition to that, they're required, external auditors are required to submit a report on internal controls. So all of that is helpful. These three things are very helpful and to ensure comparison and compliance monitoring is complete. Continuing on with internal control procedures, adequate records. We want to make sure that the company keeps detailed business transactions. In other words, everything that goes through in and out of the bank accounts, the asset accounts, the sales accounts, the expense account, all the accounts that we've looked over already, that there's adequate detailed records in there, that things just don't disappear, so to speak. We'd like to make sure that there are either hard copy documents, means a physical document, or maybe electronic copies, so that we can confirm those, that there's something, the evidence is there that supports the transactions. And we also like pre-numbered documents. Pre-numbered documents, especially those that are potentially used to access assets like checks. If you do not have pre-numbered checks, then you'll never really know whether or not checks are missing, that somebody just picked up a whole bunch of checks. Now, honestly, that's becoming less and less of an issue because it's so easy for checks to be replicated these days. And for that reason, we're actually doing much less in terms of check transactions and more electronic transactions, you'll find out. But nevertheless, there's still a good amount of checks being processed, and because of that, we like to have adequate records in place. We then want to make sure that we have limited access. We don't want to make it so that everybody can access everything at any time and any place. I know it's convenient sometimes, but when you make it so that anybody can access anything at any place at any time, then we open ourselves up to the potential of more fraud. We want to limit access employees have to assets based on job responsibilities. If you don't need it, you shouldn't have access to it. We're going to be using locks and keys, and that can be in a physical lock or key, or that can also be a electronic lock and key. You want to have physical access controls. When I think of physical access of controls, I think of fingerprint readers. I think of retina scanners. I think it's a movie called Demolition Man, where individuals were required to look into a retina scanner before they would allow them in, which can be kind of scary because in the movie, as a way for one of the bad guys to gain access, he just ripped the eyeball out of somebody. So I don't know if I want to work for a company that does that, but that is a physical access control. And then password and encryptions. So we're talking about electronic firewalls. And then the last slide we're dedicating towards internal control procedures is proper approvals. And in that context, we want to make sure that management's general or specific approval are available or are clear. Management may delegate approval to specific departments, but ultimately that's going to be documented. It's going to be clear as to why that's being done, and there has to be good reason for it, whether it's efficiency or whether it's the ability for the company to actually make things happen, whatever it may be, but it can't be at the expense of opening a door so that bad things can happen. And then proper approvals also run down to the example of a purchasing department, where only buy from approved vendors might be a policy in play, so that you control, who is purchasing from where, and then it's based on competitive bids. So these are two examples of internal control procedures in play for specifically the purchasing department to help ensure that the company doesn't just purchase anything from anywhere without the purchasing department taking some steps to make sure that they're doing what's best for the organization. Information technology is going to play a key role in our internal control systems. And when we talk about information technology, we specifically mean that accounting systems continue to rely less on manual procedures and more on information technology. The reason why we like information technology is because it improves accuracy and speed. And the examples listed here, electronic sensors and barcodes. I mean, there was a day when you would go to the store and purchase something, and there would be a little register there, and with punch keys, and the teller or the cashier would enter everything manually into the machine. And when I say machine, I literally mean a machine, because before the electronics, before the digital age, it was all just manual. It was like they were like typewriters, like old school typewriters with mechanical elements in it, where they press these keys were very long and had a punch like this. I'm exaggerating, but there was a day when that would happen. And in fact, I remember when I was a kid, we would go shopping at one of the local markets where I lived. And they would have machines, they would punch keys in, and then they would have a little arm that they would pull down, and that would ring up the numbers. That would keep track of things, and they'd come up. Even that was technologically advanced for that time. Now, that used to happen. And then about the mid-'80s, early to mid-'80s, you started to see that companies began to use barcoding systems. And I will tell you that most people initially weren't big fans. They were convinced that the barcodes were wrong, that how could they trust these barcodes to make it right? At that time, people trusted a cashier more than they trusted the technology. And it wasn't until over time that we all became much more comfortable with the technology. In fact, most of us would prefer to have a barcode system in play, because we think that they're a little bit more accurate than a cashier punching numbers into a machine. Another concept we could talk about is safeguard controls. The examples listed here are important documents in fireproof vaults, burglar alarms and security cameras, loss prevention specialists, fidelity bonds on cashiers, and mandatory vacation and job rotations. All of these are controls in place that help to safeguard assets. So, for example, important documents in a fireproof vault. Well, if a vault, first of all, creates some level of security, there's probably a security code that needs to be entered. But then if it's fireproof, it's also going to help to ensure that in the event of a fire, that they're preserved. Now, be careful with this, because sometimes when you buy these little fireproof safes that you want to keep at your home, make sure you understand what temperature that they can withstand, because if the fire is hot enough, it'll just cook everything inside that vault. That's safe. Burglar alarms and security cameras, you guys have been exposed to that and know what they can be about. Loss prevention specialists, you're talking about hiring individuals that can come in and see where there are risks at. It's part of that risk assessment. You hire individuals to specifically do that. And when they see risks, they let you know so that you can use your money wisely to remove that risk or reduce the risk. Fidelity bonds on cashiers, meaning a bond in this context is an insurance policy in the event that one of your cashiers who's handling a lot of money decides that they need some money for themselves, well, they take it. And if they take it, then we have theft involved. Well, an employee bond helps to ensure that if you do have an employee that actually stole from you, that steals from you, that an insurance carrier will reimburse you. And then the last thing is mandatory vacations and job rotation. It's a good idea that is, especially if you're a smaller organization, that you really require or force your individual or employees to go on vacation, so that way you can have other employees kind of review what they're doing and how it works and whether there's anything going on that looks suspect. That's not the way it's going to be presented, but that's just part of what happens. If somebody goes on vacation, someone else has to cover. And by them having to cover, they'll get a view as to what's going on. And in some cases, they can notice or detect when something is not going on. In fact, when I have smaller companies that have employees that do a lot of different things, that's one of the few controls that they can put in play, is to force them to go on vacation so that they can go then and take a look themselves as to what's going on. When we put internal controls and discuss e-commerce at the same time, we recognize that there's some new things that are coming. There are different risks associated specifically just with e-commerce. And when we talk about e-commerce, we're talking about electronic commerce. We're talking about the buying and selling of product and services in an online environment electronically. That's why they call it e. It doesn't have to be online, but most transactions now that occur on, that are electronic are online. So the risks that are created as a result of e-commerce include stolen credit card numbers, malicious software, phishing expeditions, and then security measures to combat these risks include encryptions and firewalls. We've already talked about encryption and firewalls, so we know what those are. We know what stolen credit card numbers are. Malicious software, well, that can be, that's a heads up whenever you're downloading some software, even to your phone, for example. Some people like to download software that they're not too familiar with, and they'll just download it. It turns out to be malicious and means that that software then gains access to your phone and then captures information and sends it elsewhere. I think there was an example of the CEO for Amazon. I think he had somebody access information on his phone, and their conclusion was that he had downloaded some malicious software which allowed an external party to access his phone. And then phishing expeditions, that is something that you've probably been exposed to already, where you might receive an email from what appears to be a legitimate organization or legitimate company, a bank, just Citibank with all the logos and everything, and then it asks you to click here to verify certain things. You thinking that it's okay because it looks legitimate, click on it, and by clicking on it, then you may even access a website that looks legit, and then you enter your username and password, and boom, they have your information.